All right, what's going on, everybody, and welcome to my monthly market update for August of 2024. I'm here hanging out at the beautiful Murray Street Park in Grimsby, and I'm currently holding out the rain, so let's try to get through this and hopefully don't get rained on. Maybe a couple of breaks of sunshine will come through, but nonetheless, here we go. So right now, what we're seeing in the regions of Niagara and in Hamilton is that things are starting to slow down a little bit. I reported last month in July that prices have just kind of started to stall out a bit. And now as we look at the numbers in August, we're starting to see that they're continuing to just fall a little bit more, and they're just starting to stall out. So when we look at Niagara, they fared a little bit better. So since the month of May, they've only decreased by 1%. Now in Hamilton, things have been a little bit worse off in the sense that since the same time frame, since the month of May, they've gone down 2.4%. Now, something that we've also seen as kind of like the bigger picture in Canada is that the Bank of Canada has let off interest rates now in 2 consecutive months, one in June and one in July, both of 0.25%. So since May, just kind of as we were talking about it, interest rates have gone down 0.5%. Now, while summer is still a slower time in real estate, usually the shoulder seasons are the most popular times to buy or sell homes. That's just when more people are active and they're kind of thinking about it more. Remember, in the summer, kids are out of school, you're on vacation, you're trying to enjoy the nice weather, right? You're not necessarily thinking about putting your house up for sale or making a big move. So it's normal for there to be a little bit of a slower activity in the summer. So I don't think this is necessarily a huge deal when we talk about the slight price declines that we're seeing. But there are some external factors that do weigh into this as well. I think households right now in Canada are being very cautious about how much money they spend. The economy isn't necessarily outputting at a very high rate. It seems a little bit sluggish right now. And the Bank of Canada is very aware of this, and that's why they're trying to let interest rates off a little bit in order to bring some more activity back into the market, back into the economy. One of the other reasons, too, is that, remember, there are the majority of Canadian households that need to renew their mortgage between basically now, if it's already happened, and the next couple of years. And they're going to be paying a much higher interest rate from when they first locked in. And in order to not really bankrupt households or put more financial strain in an already financially straining time, there needs to be some easing of interest rates overall so that it just lessens the burden for Canadian households. So while we've seen prices start to stagnate and decline a little bit over the last few months, I don't think this is going to be a bigger trend. I don't think that you're going to see this trend continue for much longer. And I think it's only a matter of time until prices start to bounce back and start to increase again. Remember, there are lots of reports coming out from the CMHC, from economists, from the big banks that are saying that we could be reaching peak prices when it comes to homes in the next couple of years, let's say by 2026, as early as 2025. And there's really one thing that's factoring into this, and that is how many people are coming into the country, how many people are coming into the major centers in Canada, and how much our population is growing within a short amount of time, and then how much does supply keep up with that? And right now, we're just not seeing it. There isn't the amount of supply needed. There aren't the builders who are investing. There aren't the funds allocated by the government that are going into new building projects at the rate that we need them to do. So over the next few years, I really do believe that all you're going to see is increased prices and increased rent prices, which really does stem into what my advice overall is and has been for the last little while, which is it's an excellent window of opportunity for buyers to get into the market, especially now that there's a little bit of a lull. Prices aren't continuing to rise as we've seen them do since the beginning of the year. It might be a really great time to assess the finances to figure out, listen, if we're going to purchase over the next year or so, why wouldn't we try to make an effort to purchase now when prices are, again, in a little bit of a trough and are only expected to increase in the future? So it's kind of one of those things. It's like if you're looking to buy over the next couple of years, it's like I would buy now for sure, because you're only going to be looking at increased prices as we move forward in the future, which leads me into my seller advice being the opposite, which is if you are not in a rush to sell, if you don't need to sell this year, then I wouldn't. If you're kind of humming and hawing about, okay, should we sell or put our property up for sale and kind of make a move in the next few years, wait that time. Over that time, your property is just going to increase. It's just going to get a higher value and you'll be able to sell for more when you eventually do. Now, if you do need to sell currently and you want to put your house up on the market right now, then there are certain things that you can do in order to increase the immediate value. Just really simple things like a fresh coat of paint on inside, especially in high traffic areas. New light fixtures are great. Definitely some landscaping out the front to create a nice first impression. And then those little odds and ends, like making sure the door doesn't squeak or making sure there isn't a loose cabinet in the closet. You know what I mean? Whatever it is. And then just keeping things neat and tidy. And that's really going to create very strong impressions with anybody who comes to the house as a potential buyer. And so that's what things are kind of looking like right now when we look at maybe something that's a little bit bigger picture, like across Canada or in Ontario. And then when it comes to the specific markets like Niagara and Hamilton. And so what I always like to do each month is look for the different areas that might present some value, or at least a little bit different than what the overall trend is. So if the overall trend right now is, a decline of, let's say, 1% to 3%, are there areas or are there certain types of homes that are seeing that are bucking the trend, that are going to actually appreciating value, or are there ones that are going to be dropping lower than that? And in Niagara, funny enough, I'm not really seeing anything that stands out in terms of like a trend beater, except if you want me to start talking about the condos in Grimsby again, but I'll leave you with that to check it out on my previous videos. And then when we look at Hamilton, really the only thing that I'm seeing is actually in townhomes in more of the luxury markets. So in Ancaster, Burlington, and Dundas, townhomes have dropped in price lower than what we're seeing across the region in general. And just speculating here, but maybe one of the reasons is that the townhomes are kind of seen as more of the entry-level properties or units to purchase in those respective markets. If you're looking to get into a home when you've got a young family, or you need a few bedrooms and you want a few bathrooms and a backyard or whatever it is, obviously a condo is not going to work for you, a condo apartment. So a townhome is kind of that first entry-level unit that becomes more realistic for purchase, especially if you have to be into those markets. They're desirable for you, or you need to move there for work, whatever it may be. I think because people are being more cautious about what they're spending their money on, because interest rates are higher, they are thinking about taking the money that they would normally spend on a townhome in one of these luxury markets or these more expensive markets like Burlington, Ancaster, and Dundas, and maybe just traveling a little bit farther of a distance for work or whatever they need, and taking their money and going and putting it into a market where their dollar can go a little bit farther. We saw this a lot during the pandemic, where prices were sky high and people started to kind of buy property out in the areas that are a little bit smaller, a little bit more affordable. And so there might be a symptom of that. There might be some reflection of that in what's happening now, while people are being a little bit more cautious about what they're spending money on and how they're spending their money. But other than that, the recap for this monthly market update is that prices in Hamilton and Niagara are just starting to slide a little bit, 2 months in a row. There's been 2 interest rate drops in the last 2 months. There's definitely going to be more to come this year, and I'm expecting prices to continue to increase as we look forward over the next couple of years. So hopefully that was helpful for you, and hopefully you got something out of it that was useful for you. And I hope you're having a fantastic summer so far. We've got a little bit left, so let's try to get out there and enjoy it. But I will keep these market updates coming, of course, and I'll see you on the next one in September. See you then.